Now, GM also slashed its annual profit guidance, in part because Mary Barra is making clear that they are not necessarily going to pass along the cost from these tariffs to consumers in the form of higher prices. Thus, that's why it's going to eat into their bottom line. Take a listen to what Mary Barra told Aaron Burnett earlier.
We do know that there's more conversations going on. For instance, the negotiations going on with Japan and South Korea, China, and many of the other countries that impact from a supply chain perspective. So we think that there's more impact potentially. But again, right now, the clarity that we got was so important because it allows us to make decisions for our footprint in the U.S. and in North America to be able to respond to the tariffs and make sure that we have a growing and strong U.S. auto industry.
So GM clearly talking about the impact here of the tariffs. And it's not just GM, right? We've heard from a number of major corporations in the last 24 hours or so. McDonald's reporting its weakest sales since COVID. Harley-Davidson abandoning its financial guidance, all because of tariffs. And Challenger Gray and Christmas, the outplacement firm, they pointed out that U.S.-based employers, they announced 105,000 job cuts in April. Now, the good news is that actually represents a significant drop from March. The bad news is that's more than 60% higher than April of last year. In fact, looking back in history, this is the third highest number since Challenger Gray and Christmas started tracking this back in the 1980s. The only two times that were higher were in 2020 during COVID and in 2009 during the Great Recession. And year to date, employers have announced a significant number of job cuts, again, more than at any point since COVID. And we've seen it in a number of different sectors, technology moving up, but most notably government layoffs have gone dramatically higher as DOGE has cut federal spending, federal workers, grants and research as well. Nonprofits, another indicator of the DOGE effect there. And when we look at where these layoffs are taking place across the country, what stands out is that the eastern part of the United States, so far this year, there's been more than 200% increase in job cut announcements, and that has been led by Washington, D.C., which again has been most impacted by DOGE. Now, all of this sets the stage for tomorrow's much more closely watched government jobs report, and that is expected to show that U.S. payroll growth slowed sharply in April. A significant decline is expected to about 135,000 jobs added, although, Becky, I would note that the unemployment rate is expected to stay relatively low at 4.2%. I do think, though, that some of these announcements from corporate America, some of these indicators on the labor market make you wonder how long the unemployment rate can stay this low.